this section. I can't go say my namesake because I want to be like you.
You're welcome. Hopefully. Emmanuel Shaka. So I'm the founder of ZM Strategy. So I'm fully into forex trading and crypto trading as well. All my voice is loudly now. Okay, I say my name is Emmanuel Shaka. I'm a data boy, Udu Ubu. So I'm fully into forex trading and also crypto. The founder of ZM Strategy. So I think I'll be talking more on Forex because I think I saw one of your videos where you are talking about W pattern, support and resistance. So I think I don't know. I believe that most people here are basically beginners. Everybody. So my ears one ears go deep so that I'm not confused now. So I'll be throwing more light more on what he explained because support, resistance, trend line, W pattern, M pattern, these are the basic in trading. Like most strategy, they are like the foundation. So most strategy are built upon those things: support, resistance, supply, demand, patterns. So you get, so I'll be just throwing more light on those things there so that let me not just go deep. So a marker.
That one first.
Trendline. Uh, supply. Uh, so what I write here is support and resistance, trade line, supply and the demand, W and M, then market structure and head and shoulder. So now what is support and what is resistance? Like I say that these things they are the foundation on most strategy. When you hear about SMC, hear about okay. So when you hear about SMC, hear about hear about different strategy. Most of them they are being built upon this thing that you are seeing. Now support is just like a particular price reach and turn back. In the sense that when you are talking about support, like let me just start with market structure so that it will more. Let me use my tab so that it will more. I mean, I don't know if this if we come up like okay, yeah. So when we see this, with just seeing this, we can understand that the market is what is going up, Abi. By just seeing this movement, we understand that the market is going up. So when they talk about support and when they talk about resistance, they are trying to say that this place where the market turn from the top is acting as a resistance, while this bottom they are acting as a support. Now, what does that mean is that when they say this is resistance, this is a support, this is a resistance, this is support. Also, in terms of market structure, we can say that this is our high and this is our low, this is our low, this is our higher high, and this is our lower low, lower low. Then when we have something like this again, we now have another higher high like this, and this is now our lower low. Now, by we just saying that this is a bullish market, we understand that these are the turning point of the market. Now, why we call this place the turning point of the market, we understand that we have sellers that are sitting on this particular place that make price to push down. And we also have buyers that are resting on this particular place that make price to push up. Also, we also have sellers also here that make price to come down. Buyers here that also make price to come. So that's why in any strategy, they will tell that before you enter a buy trade or enter a set trade, you must first of all see a break of structure, right? Market need to break out. I don't know if I'm not going far. I not fast. So like in terms of you entering a buy trade or a set trade, like I say, by we seeing this particular thing, we will understand that the market is going up. Now, why the market is going up is that the market is taking those people that they are trying to sell, like people that they are trying to push the market down. Market is taking all the resistance. Why the support market is not taking all this support level that we are seeing, which is people that they are trying to buy. Yeah, market is not taking them out. Just like you taking your trade and putting your stop loss here, the market pull back but did not get to this level that you put your stop loss, then it push up again back, abi. So which is people that are trying to sell in the market at this particular level, market is taking the stop loss, because if you want to take a set trade, basically you take your set trade and basically you want to put your stop loss above that high. If you are taking a set trade, like if you believe that the market is coming down, like you don't take a set trade, basically you take your set trade, try to protect this high. Once market reverse and take it side, definitely the market as well that hits your stop loss, right? Are you fast?
Yes.
Okay, very well. Quit. Let me just
Completely
new.
new bid. Don't
Okay.
even know the buy and sell.
Now let's start with no problem.
Start from the beginning.
I feel say you already, like, based on what I saw on your video before. So maybe you are already. So now, what is market structure? In order for you to identify a market, you must first understand structure. Structure in the sense that we have bullish market, we have bearish market. We have bullish and bearish. Bearish means that the market is falling. Bullish means that the market is going on. These are just Forex terms. The market is bullish, the market is bearish. When you hear bullish, it's going up. When you hear bearish, it's coming down. We just Forex terms. Now, in order for you to know that market is bullish, you want to see market creating highs, like creating more highs, like creating more high, which is taking all the people that they are trying to sell down, which is we want to see market giving us something like this. In the sense that market is taking people that they are trying to shut the market down. People that they are trying to sell here, market is taking the stop loss, then creating more high, which the market is going up. And when the market is going up, we observe that the market is not taking people that they are buying from this level, because these are buyers, these are buyers, these are buyers. But people that they are trying to sell from here, market is taking there. So which is people that they are trying to take, they are trying to sell the market down. Market is taking the stop loss. People that are trying to take the market down, the market is taking the stop loss, but market is not taking people that they are buying the market. You see that when the market pull back, it will not pull back to this level. It will pull back to only basically to live like 80% or 70% between year and year, then we push back again because why? The market is going up. So once you're able to identify the market structure, like know where the market is actually going to, then you will know which trade that you're supposed to take, either a buy trade or a sell trade. Because if the market is bullish and you are trying to sell, definitely you are not taking a counter trade, which market might be eating your stop loss back to back because why? You are not following the direction at that particular time. So that's why you need to understand market structure. So like this now, this is a bullish market because why? The market is what is going up. And apart from that, the market is going up. We also understand that the market is taking people that they are trying to sell. Why the market is protecting people that which the market is not going below these lows, which the people that are buying the market is not taking the stop loss. I don't know if I'm clear. And so the market is not taking their stop loss. But people that are trying to sell the market is taking the stop loss because we have seller like shorting the market, we have buyer they buy the market up. So you get so this is not a bullish market, which is if we should draw a trade line, we will see that the trade line is what is going up. Is going up like is ascending, like going up. The market was is going up, which is now when we say market structure, when we have something like this, first of all, we understand that this place the market starts going up like this. We usually call it place our low, our first low. Then the first high the market create is now our first like high, like this, our first low, our new high, like market case. So when the market pull back again and go up, we'll now call it place our higher low. But why we call this place our higher low? Why we call this place our higher low is that this low is higher than this guy. Because that previous low, this new low is higher than this guy. That's why we call it our higher low. Then when we have market coming down again, then market has now created a new high. So this place will not be high, it will not be a higher high because that high is higher than you get. So here's now our higher high. You get so when the market will come back again, the pull back up, market has now created a new higher low. Then when market pull back again, it's now created a new higher high. You get so this is just the basic like of market structure. So by you seeing this, you now understand that the market is what is bullish, is going on. So if you are trying to take a set trade, you are not trading against the trend. And once you are trading against the trend, there's probability that market will hit your stop loss more often. Because now people like what is currently in control now is buy, like bullish, but you now you are trying to sell, which are not trading against the particular trend, which is you are trading against the direction at that particular time. You get so market will hit your stop loss more often. Yes, I'm coming now. Hello? When we talk about bearish, it's just the opposite of market coming down. Now, when market is coming down, the thing that we can see here is that market is what is taking people that they are trying to buy. We have buyer here, we have buyer here, we have buyer here, we have sellers here, we have sellers here, we have sellers here, and we have sellers here. Which is market is taking people that are trying to buy the market up because why market is getting more loose, is coming down, which is falling, which is the market is what is bearish. So you get to which is for this our first high, and this our low, and this now our a lower high, this now our lower low, lower high, lower low, lower high, just like that. Because why the market is what is falling down there. If you want to use trend line, you see that the trend line is what is descending down, is coming down because the work of trade line, like for you you guys that are new to trading, now trade line can guide in terms of knowing direction by joining your trader. Like Then when like you are still new in trading, what we use there is trade line support and resistance. So once we are able to connect our trade line to our levels, we understand that the market is falling, it's coming down. So that's just the work of trade line. Like trade line just help to tell you the trend of the market at that particular time. Because when you are doing something like this, we common say you know that it's going up. When you are doing something like this, you know that it's coming down. So yeah, so that is just the work of trading, like help you to tell the market direction at that particular time. Remember that in terms of direction, we have bullish market, bearish market, and also ranging market. Bullish market, bearish market, ranging market, which is shopping market. In the sense that the market is not going up, it's not coming down. But understand that like these two explanations I give for this bullish market, we understand that the market is what is taking people that are trying to sell, but it's not taking people that they are buying the market. While for this other one, we understand that it's taking people that they are buying the market, but it's not taking people that they are selling the market. But in terms of market that is ranging, it's not taking both sides. It's taking both sides, which is it's taking people that they are buying, it's taking people that are selling, which is there is no clear direction at that particular time. There's no clear direction at that particular time. It's taking people that they are selling, it's taking people that they are buying, it's just ranging on a particular place, just going up and down, going up and down, going up. So that is now a ranging market. And we have people system that trade mostly on a ranging market. We have people whereby their strategy is so by when the market is going up and down. They don't trade a trading market. It's only a ranging market. So you get to. So this is just a little definition of market structure. I don't know. Hope it's clear now to at least our best knowledge. So now for this aspect of market structure, now let's bring in support and resistance, which is the most. Okay.
So the bearish and the so at what point do you know whether to buy and resist?
Yeah, that is. There are so many things to look at, but let me just relate this one. I'll try to relate everything together. Now, I want to talk about support and resistance. Remember, I told you guys that if you have something like this place, this up is starting as a what? Then this down is starting as a what? So this is our resistance level here, and this is our support level here. Now, market price, which is current price now, is within these two range, within this our resistance and this our support, which is price now is now in between. We have not actually know where price is actually going to, because the market just form a V pattern. So when we see market giving us a break to the upside, we now understand that the market are giving us what? A breakout. They can call it a break of structure or a break or whatsoever, which is the market that's taking people that they are trying to sell the market down. Now, like the question that you asked, let me now relate it. Forex is a business where people trying to like, you're like person that want to exchange naira to dollar, for example. They want naira to drop to a particular level before they will buy, or they want naira to go to a particular level before they will sell, based on in business. Now, with that business idea, you cannot say when market just give you a breakout, let's say a breakout like this, market give you a breakout like this, market just give you a breakout like this, you just want to jump into buying because market just give you a breakout. Then maybe you want to jump into buying, they put your stop loss here. Most times you will end up, even though maybe the market actually still push up, but you're not going to make much profit. Because why? Your entry point and your stop loss is just too big. Which is, if example, maybe you are trading a breakout, for example, market just break at this level and you just jump into buy, because why? Market has break at this level, then you want to cover this split as your stop loss, because why? here was this particular level was this particular turning point was the one that actually pushed the market to give us this breakout. Then you want to cover this point. If you should observe between year and year, you're now having a big stop loss. That's why most people now use what we call um, Fibonacci. Fibonacci retracement. Now, what it does is that it helps you to calculate your discount price, your premium price. In the sense that if, for example, maybe you as a business owner or as a business person, you want to buy a particular goods, and based on your analysis, you are sure that this goods is going to reduce to a particular amount. You are going to last before you put your money. I don't know if you are getting me. Just like example that maybe like you know that for business, the particular is whereby a particular product will go up, a particular product will come down. So which you as a business, you have already know that a particular time this product might go up, and also a particular time this product might also come to like a cheaper amount, which is the best time to buy and keep, then wait till when you sell. So that's also you also relate that same thing to Forex, because Forex is also a business. Since market has given you a breakout, you don't need to rush into just placing buy trade. Now, when market give you a breakout, there's what we call a retracement. Market will surely pull back. After an impulsive move, there's what we call a correctional move. On every impulsive move, market will always correct. After an impulsive buy, you see market retracing back like gradually, which is after market that give you an impulsive movement to the upside, which is market that give you a buy, a break of structure. The next thing you are expecting for market to do is for market to what? To pull back. For market to pull back. Now, when market is pulling back, this is where we have our breakout from year to year, which is you are now waiting for market to pull back to at least to a 50% level within this range. Let's say market start pulling back from this level like this. Now the help of Fibonacci, now you are now measuring from year to year. But if we should look at our normal human eye to look at, we can say, okay, this place is our 50%. By just guessing, we can say, okay, our 50% might be within this level. By just guessing, for example, you can say 50% might be within here. Like we want to divide within year into two, like half. Can say your 50% might be within this level. So you might wait for market to pull back to at least to 50% discount before trying to take a buy trade. I don't know if so you might wait for market to pull back to 50% discount level before taking a buy trade than just jumping. Most traders wait for market to pull back to at least 80% if they are sure. Like for me, for example, just like one signal I drop for the group, one of the group, when I drop the signal, one of the person just comment that the stop loss is too tight. So when I see the comment, I just laugh. Because what I laugh is I understand that okay, this would actually beginners. Like me, I cannot take trade that cannot give me warnings to trade, which is if I'm risking 100,000, for example, at least my minimum target should be 300,000 at least minimum. So and the only way you can achieve that is how to maximize your stop, to minimize your stop loss, to refine your stop loss. So if I should take a trade from this level, for example, now I need to find what actually caused that breakout. So I don't need to cover all year as my stop loss, cover down to this low as my stop loss. I need to find what is initial, like what actually caused that breakout. Because while we understand that the market, what actually moves the market is liquidity, money. What actually moves the market is which is liquidity. Now they are saying more, which is buyers and sellers coming into the market. That will actually pull the market. So if market is actually going up, like if market is actually buying, is not targeting those people that are trying to enter the market earlier. We trying to take them out. So if I can be able to identify those levels, I know that when market is is supposed to reach and react and start going on without me covering this whole place as my stop loss. So by me refine that, I will not be able to get a more tighter stop loss than covering this whole place as my stop loss. You get? So, but you guys that are new, the most important thing is that as one market has given guys a breakout, now this was the turning point that caused this breakout. Since market has pulled back to at least 50% discount level, you cannot enter your trade, then cover this split as your stop loss. Because why? Here was the one that actually give us a breakout to this level. So you cannot take your trade while you are covering this low as you what as your stop loss. Basically, you might be targeting 1:1, 1:2, because you are still new. You are still in the market, so your mentality 1:1, 1:2, just be mastering just like that. So because in order for you to say this market has not changed from bullish to bearish, it's only when market now come back again, then take this level, take this low. Since market has taken this low, you are not having two mindset that this market might not start selling. Because why? This low was actually the one that actually take out that high. But since market has come back again to take that low again, you might be having two narrative that this market will now start selling. Because why? Market has not taken the low. I don't know if I answer your question on that. So you might have that mindset that any market will not might not selling for that because why? Market has not taken that particular low. So then now let me just assume that let me just redraw this thing again. Now other way to also enter the market. Now market has given us a breakout, and we understand that this place is actually acting as a resistance. Then why this place is acting as a support. Now we understand that if market break a support or break a resistance, there's possibility that resistance might turn to support, or that support might turn to resistance, which we call resistance, turn support, or support turn resistance, which is market has given us a breakout for this particular level. Then which is this place now is our this way was acting as a resistance before. Now the probability that this place might act as a support. So if we see price, if we see candles, maybe example, this was H1 time frame, for example. Then we now see the H1 candlestick now pull back again, get to this particular level, then fail to close below it. We only see a market rejection, with the market reacting to that support level, that resistance that have come to support level. We see market reacting to it, which the market failed to close. That candlestick which failed to close below that level. Definitely there's a tendency that the market might start buying from there. Because now which is the resistance might likely turn to a support. I don't know if you guys are following. Yes. So okay, so this resistance here has been broken, which is now it turned to support at this level. So there's what we call candlestick confirmation. Candlestick confirmation, which is you might be looking at a chart, the candlestick might be telling you something. Just like when candlestick they are ranging on a particular place, they are not going up. Like candlestick just in the sense that you are seeing multiple candlesticks doing something like this, which is they are just ranging there. They are not going up. They are just reacting to a particular level. Now that look can tell you that the probability that market can just start dropping, can just start going down. Because why? Market is trying to break a particular level, but it keep on failing. It will try again, it will see close below. It will try again, it will see close below. Which is the candlestick is not saying that I might sell here, I might sell here, I might sell here. So by you see that's what we call a candlestick of confirmation. Because now candlesticks, all the candlesticks they are closing. Let's say this place was a resistance level. Now all the candlestick they're actually reacting to this resistance level, but all the body is closing below. We only seen a weak rejection, but all the body that wish it. With this, you can actually see that this market is going to sell. Let me enter a sell trade. Then put my stop loss above the week. Then enter a sell trade. Also, this, so when you see market coming down to that your support level, and the candlestick fail to close below you, definitely with this, you can say, okay, let me enter a buy trade. Then probably look for something here to put my stop loss. Because trading, you see, is just like a rules that you need to set for yourself. You can say what I just want to be trading is a break and a retest. You can say what you want to be trading is for market to break out and pull back to your 50% level. So you need to set a rules that you are following. Not just like you are trading A, you are trading B, you are trading C, you are trading D. You must set a rules that you are following. If you are a break and a retest trader, you will stick to that. If you are a Trendline trader, you will stick to that. If you are so that once you stick to a particular system, you can be able to build yourself more than to say you are, because now once you focus on a particular system, at least you trade that system for at least like 4-6 months, you can be able to tell that this system is profitable, this system is not profitable. But if you are trading A, you are trading B, maybe you make money for A system, you lose for B, next one you make for B, you lose for C. You cannot be able to tell if you're actually going up or you are going down. So like this I just said, for example, now, so when you see a breakout and a retest candlestick fail to close below, you can say, okay, this now is a like market is actually reacting to that support level. So let me take a buy trade, which you are now getting a candlestick confirmation to take a buy trade from there. Or you can say market should pull back to a discount level for me to enter my buy trade. Or you can say you want market to pull back to a premium level before you can enter your buy trade. I don't know. I hope I'm not confusing anybody. So that you also same thing. Well, if we also have something like this, then we see market giving us a breakout, for example, which is market breaking this support level. Now there's a possibility that market can also come back and react to this level, because now the support might also turn to a resistance. But the only way it can turn to resistance is not be say market just come, it just tap, you just take a set down. No, you have already understand that this direction is likely to be bearish market. But before you will enter, you want to see a confirmation. Let me say market just get close to resistance, you just take a set down. No, you not just jump like that into market. You need to see some confirmation. Either market pull back to that level, then you see a rejection, just like what I just explained. Market tapping there and now react to that level, which is show a confirmation that when you see that, or probably you can say, let me wait for that candlestick to form fit to see if that candlestick is going to break or close, which is tap, react, and just close there. Fail to close above it. Once candlestick close above it, it means that place has been invalidated. So it's only when you see a reaction and also close below, which the market actually respect that place, then you can think of that entry a set trade. So, or like I say, either you wait for market to come to at least to your 50% level between your low and your high. Market should pull back to your discount level, then before you take your set trade, then cover. Because if you are taking trade using this reaction here, definitely your stop loss might be above the week. There's no point of you putting your stop loss here, because now you're not really candlestick confirmation. So basically, you might just give space for, let's say, for example, let's say the market when the market pull back, let's say when the market pull back, you actually pull back to like this, then it now rejected, which is the body of the candlestick now close below it. So you might take your trade and put your stop loss above this week. Then your entry might be somewhere here. So there's no point of it you want to put your stop loss here again. It's only when you are saying market should pull back to your 50% level or discount level, like pull back, then you now try to cover the high that actually gives you that breakout. I don't know if I'm clear. It depends on the confirmation that you are using. If you are using candlestick confirmation, there's no point of view unless maybe you are not sure. Like you see you're not too sure of what you are doing. Okay, since you're not sure, you can now cover that low. Just cover everywhere. Like what I usually tell my people, you can like cover from point A to point C. If your direction is not sure, they'll still come and take you out. You like cover like 100 pips. After your direction is not sure, they'll come take you out. So you get so if you're actually sure of what you are doing, they don't really cover for year to energy, so you will cover everywhere. So cover where that you know that market is actually going to turn back from. So that once market turn, you're going to at least if you're making money, you're making something reasonable. That cover the whole of 100 pips, 200 pips. Then you're making 1:0, not even 1:1 self, which you are risking $1,000. You're making $100, you're making $50. That is gambling. You are risking $1,000, you are making $100, you are making $50 for which is if market start going against you, you are losing $1,000. Instead of to be like risking $100 to make like $500, at least once you get that direction right, you are making times 5 of what you are risking. But you are not losing that, so that's why you must be sure of what you are doing. But you guys that are new, like I said, for example, you can start with this one, just be building your confidence before trying to reduce your stop loss. So 2 ways, if you are not too sure, like I say, you can cover this eye. Because this eye was the one that actually the market turned from before giving us a breakout. Can just cover everywhere, then you enter your trade like that. Then, at least I have explained Trendline now. Trendline just like when you are doing a trade and how to draw Trendline is very easy. I've explained market structure. If a market giving us like this, market creating highs. So the idea of Trendline is that you must try to connect your Trendline to at least to minimum of 2 points, point A to point B, which is here is our first point, which is our point A, and here is our point B. So we'll now connect our Trendline from our point A to our point B. Once we're able to connect the trend line from point A to point B, we will now extend it. We will now extend the trade line. But now there's what we call a trade line strategy. Just like the way we have a support and a resistance, which is let's say for example the market has not. Let's say this is what we have, and we have now connected our trade line from point A to point B, like this, which is this is our first touch, this is our second touch. Now we are now anticipating a third touch. Because why? We are with this, with what we see, while the market is going up. The way we have a support on the way we have a support on resistance or resistance on support, that's also have a break and a retest trade line. Now we have connected our trade line, we have gotten point A, point B, then we are now expecting the market to come back again. And when we see a market test the trade line and fail to close below it, which the market reacted and candlestick now close above it, we have now gotten a confirmation of that entry a trade. This is now our point C, which is our third touch, which can enter our trade here, and we might say, okay, let's cover this place as our stop loss. This other low here as our stop loss. While we are entering a buy trade, while we are targeting this place as our take profit. This is now a trade line strategy. Be able to connect the market from point A to point B. Then you're now waiting for point C to encore, which is connect that from first touch, second touch. You're now waiting for third touch to encore. Not like what I explained before. Not be saying market just get close to your trade line, you just jump into buy trade. No, you must see what we call a confirmation. You must see price reacting to that level. Because trade line, if you actually draw your trade line way, trade line is also acting as a support and a resistance as well. So you must see market reacting to it. If the market just get close, you just jump, just take your buy to no. You must see that confirmation. Because any mistake that you make, you will lose your money. So that's just the outcome. You make a mistake, and it's better that you lose your money to learn something than you just lose your money without learning anything. Because once you are losing your money, you are learning something, you are going. As far as you are following a particular system, you are going, you are going. But if you are just doing anyhow, you lose your money, you are not even going yourself, you're like you are still in just one particular place. Because there are some people that have been in this market for like 7 years, 8 years, 5 years, they are still in one particular place, they are not going. So you understand? So this is a trade line. Like I said, what trade line asks for two things. You have to tell you a direction if market is actually going up or come down. If market is actually going up or come down, then trade line is zone is also a strategy, which I just explained. First touch, second touch, third touch. It's also a strategy on its own again. Apart from that, it's telling you that market is going up or is coming down. People also trade line as a strategy. They also kind of confluence it with support and resistance, like putting like adding everything together to take your trade. Then also, if we have market also coming down like this, we understand that we have gotten our point A and we have gotten our point B. We will now extend it, waiting for market was to come up, like to give us our third touch, first touch, second touch. We're now expecting what a third touch. Therefore, us to take a set trade down. So that you see, if we did understand the market world is coming down, the by we using trade line to trade, we're now waiting for market to give us a third touch. So you get. So now supply and demand. Now supply and demand is just like let me see, it's the same thing like when we're talking about support and resistance. Now when we say supply, if we have something like this, here is our supply and here is our demand. But now in case of supply and demand, and in case of maybe support and resistance, remember for support and resistance, if we have if we have a candlestick like this and now start coming down, let's say we have now most people they will draw the resistance line at the top of this wick, abi, like this. Some, the white some might use body. Let's say we also have the same thing like this. This is a bearish candlestick. This is the bearish candlestick like coming down. Now some might decide to use the body, which is, if you go to line chart will be the body. But if you are using candlestick, some might draw the resistance line at the wick, which is this wick here. Here as the resistance, or the body as the resistance, depend. But in terms of supply and the demand, now let's say I have something like this. I want to differentiate the two because they are acting similar but a little bit different. Now let's say we have market going up, going up, going up, going up. The market start coming down. Just like this, all these that are bearish candlestick, bearish candlestick. Now, if I want to mark my supply level, for example, I might decide to mark this whole place as my supply level. I decide to mark this whole place as my supply level, this whole place as my supply level. That means marking just this up, which is I might decide to mark the last bullish candlestick before a bearish candlestick, or I might decide to mark the last bullish candlestick before two bearish candlestick, depending on where I want to mark. Which is, if market now pull back to this particular place, now market has now pulled back to my point of interest, that place that I mark, which is this whole supply level that I mark. Now remember, for resistance, market need to test that your line at the top But this time around, this whole place is acting as my supply. So when market pull back to this level, which market has now pulled back to what my point of interest. So this is where I will now be waiting to take my trade from. Which is, this is a range. Let me say this is a range because it's the boss I mark. So once market pull back to this particular place, I can decide to take my trade here and my stop loss will now be above here. But if I want to refine, I'll now be waiting to see some confirmation before taking a set trade here. If I want to refine, but if I want to refine, for example, maybe I just want to enter as market just tap. As market just get to this supply level, I'll just take my set trade, then my stop loss will be here. And I will show you guys some live chat example, maybe when we want to analyze chart. But I don't know if the differentiation is clear between resistance and supply. Remember for resistance we are just drawing where market turn from, like this, a line, the turning point of the market where market just turn from, which is like this. We are just joining just like the market structure I explained, just like what I explained. Let me use okay. Just like what I explained like this, for example now. So this is our turning point. Abi, so for suppose I might just draw line here, this turning point, or draw line here, this turning point as my support. But in terms of supply and demand, I'm not just drawing line. I'm marking a significant level that market actually turn from, which is I'm bossing a particular range, which I feel like market like if market get to there, I like that place is going to hold price to turn back. I'm not just using line. I'm marking like a particular level that I'm sure that is going to hold price. So once market get to there and I start seeing some reactions to confirmation, I can just enter my trade. I put my stop loss above or where I want to put my stop loss at. I don't know if I'm clear. So that's the difference between supply and demand. Also, the same thing here. When you also have candlestick start coming down, you know, like when we have something like this, you don't mind my drawing. These are bearish candlestick. They will start seeing market start going up, bullish, 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 bullish. So now, if I want to mark, now remember this is our turning point. This down. That's where market actually turn from. If I'm marking normal my support, I can just draw a line here because this is where market actually turn from. But in case of demand, I will mark where my likely hold price, which is I'll mark a particular level that my likely hold price, not just that place. So you get, so which is when market pull back to there, and I'm looking for confirmation before entering my buy trade, or once market just pull back, I'll just enter my buy trade, they put my stop loss above here. That's just the difference. Supply and demand, which is demand is where people that are trying to buy the market that demand. Supply is where people that are trying to short the market down. Also, you know, as resistance is where actually reverse market and where sellers. So that's just the difference between supply and demand. Then we want to talk about M and W. Now these are patterns in the forex market. Now when traders see market forming M like this, when traders see market start forming M like, they believe that the market is going to sell. And also when traders see market forming W, they believe that the market is trying to buy, which the market is going to buy. Now, why traders feel like the market is going to buy or the market is going to say that? With what I just explained concerning market structure, you understand that when market create a M like this, now I don't know, what can you see? But market creating this M like this. Eh? Eh? Apart from downfall. Eh? Apart from bearish or downfall, like what can you see? When market create M like this, like what can you see? Because anything that you are doing, there must be
It's like a region.
a reason. There's a reason behind anything that you are doing. So apart from that, the market is falling down. Which thing can you see? Like can you see with this? Let me take it. Because I've explained supply. I've explained. One person talk. Let me see actually.
I will look out for a buy opportunity.
For oh God. Ranging market. Who again?
The market not break the previous resistance.
The market breaking. I will say the market breaking now. Because the M and W they are on different form. You can have some that will not break. You have some that will break. They are on different form. So I don't know which thing you can actually see.
That's breaking the resistance.
Where?
That's support.
This support.
Yes. That's higher.
This one. This one. This one. This one. This one. Okay. Now, when you see market trying to create M or market kind of trade W, now people call sometimes when market give you equal, like give you something like this, equal I like this, which these two places they are equal before drop. Now they call this one double top at the particular level, double top because just before coming down. Now apart from that, they call this one double top. The thing that you can see that because me, I call this a neckline break. A neckline break. Neckline break. In the sense that if we should look what the market did here, like what our person just explained, it give us a breakout actually here. Then we understand that this place actually is acting as a support. That market give us a breakout. So now there's what they are. Remember, all these things that you are seeing, they are strategy on their own. Support is strategy on their own. Trade line is strategy on their own. Supply, all of it, they are system on their own. So you get. So what market give us a breakout now? Market has not give us what a neckline break. This was the support that the market break, which might likely act as what as a resistance. So now when market give that first breakout, most traders don't jump in. They wait for market to pull back to the neckline. Here is the neckline. To pull back to here, then before they will start, when they start seeing a gas, before they will start taking the set trade, which now a neckline break. Market need to pull back to that neckline that break from. So when market pull back, so this is where they will start taking the short trade, like the set trade from. Or some people again as well, because like I said, all these things they are rules. So the same thing again, like when we have a M like this and we see a breaker, let's say this was the candlestick, like the first candlestick that actually break out from this guy. Now, trader will start taking the trades from the next candlestick that is about to form. Because most times the market might not pull back immediately. It might just start going down before it might. So some traders believe on there's what we call a breakout strategy. One market just break out and candlestick just close. The next candlestick you see aggressive entry. And once they are taking their aggressive entry, their stop loss is now above this candlestick that actually give that breakout. That's why I see some people flip account. Their stop loss will now be this candlestick that caused that breakout. They are not covering this place as their stop loss. This candlestick that actually give that breakout, that is now like that is the popular level that they'll now be using as their stop loss. You get to, they will not take trade for the first candlestick. They will take trade immediately the next candlestick want to form. Immediately they see that the candlestick just closed below, which the market actually giving a breakout. The next candlestick immediately they will start taking the set trade. Till they say the ones they see that market want to pull back. But like I said before, for every impulsive move, there's what we call a correction. On every impulsive, if market impulse to the upside, you will see market correcting down. So once you see that market want to correct, they'll just close all the trade. When the market want to correct, they'll close all the trade. Because on every impulsive, there must be a correction, no matter what. So you get to, like I said before, all these things, they are system what they want. So people will start taking trade on immediately the candlestick want to feel like try taking a set trade down. But if you are like those guys that you are new, what will happen once market give you a breakout, the next thing you're waiting for is a pullback. A pullback. Once market give you a breakout, what you are waiting for is a pullback. What you are waiting for is a pullback. So you get, because once you want to leverage your market, you must understand leverage, how to work with leverage before you can be able to do flipping. Because once you just start taking trade without knowing how to calculate stop loss, take profit, understanding leverage, just a small pullback, your full account are boom. So you get, so as a new trader, those guys at the beginning, so once market just give you a breakout, what you're looking for is a correction, a pullback to enter your trade. Like I said, basically you can cover that low that caused that breakout to be more on the safer side, because if the market take that low, you're now having another anticipation that the market might buy. But once you are doing a refinement like this, for example, maybe a breakout, the market pull back to a particular level here, then you take your set trade, then your stop loss was somewhere here, and market hit your stop loss. Now market has not actually invalidated your setup. But the market is still safe. Because why? The market has not actually taken here. You only take where you put your stop loss, which market can still sell. Which is you now try to enter on that trade again. You market will not take your stop loss again. But market has not actually invalidated your setup, because the market has not actually taken this move that causing that break of structure. And that's why to control your emotion. Because one thing about trading is psychology, emotion, strategy, everything. So once you're unable to control your emotion and start jumping into trade, you start doing what you're not supposed to do. So as a new beginner in Forex trading, one market give you a breakout, wait for a pullback, then at least you can target 1:1, 1:2, just to be building yourself gradually to control your emotion. Because even on target 1:5, 1:10, definitely you will be thinking on how to reduce your stop loss to be very tight to get us to 1:10 in a row. Because one market is the stop loss, you have to find that place to enter the market if you're actually sure of that direction. But once you are covering the whole place, that actually cause that breaker. You know that once market take that place, okay, market is not selling again. Let me wait for another signal to enter the market. So just to control your emotion. Then the same thing as if market is creating W, the same thing. Now, in order for it to be like you don't, one thing you guys need to understand is that you not just trade just a W or a M. Everything you just market they create W, you just market won't sell, let me just jump inside. No. Or market they create no. You must try to relate it to something. Like I've explained supply, I've explained the demand. Now, like I said before, support and resistance, they are the turning point of the market. Supply and demand is where traders are also buyers trying to buy and sell. So if market is creating M or is creating W, you will try to relate it to where that particular level is coming from. Which if for example, maybe you are seeing market creating W like this, maybe from H1 time frame example. Now this is where the market started creating that W4, which is the turning point there. Now you try to relate it to higher time frame. So you will now check 4 hour, you mark that level, this level that this market is creating W4, where is it coming from? Is it coming from a good point of interest for me to enter a buy, or is just creating this thing from a random place? Once you're able to trace it to see that okay, this place is actually coming from a supply and a demand level, or it's coming from a resistance level from higher time frame. Now you're not getting a higher time frame confirmation to give you more confidence to take a trade when market give you a breakout. Which is you're not getting another bias from higher time frame than just one time frame. Once you see market forming M or forming W on 30 minutes time frame, what you're going to do is to relate to higher time frame to see whether particular level is coming from. Is it coming from a strong supply level, or is it coming from a strong demand level, or is it coming from a resistance? Like, where is it actually coming from? I don't know if you guys are getting me. Just to relate it to higher time to get now, you're not getting two bias, one from higher time frame and one from the time frame that you want to take that trade from. So that once you're entering a trade, at least you are getting a bigger time frame confident. Just like when you want to do batting and you know that you get one guy big man for higher position, you'll be confident to do that to do that your batting. But when you not get any big man, you go tired on your own. But once you fall, you don't fall. So once you get like a bigger time frame, I see you guys say, okay, let me take that trip because now you are getting a strong correlation from a higher time frame than your lower time frame. So now what I talk about time frame is that let's say we have M forming on M30 time frame, and it has given us a breakout. We're now waiting for a pullback. Now you want to have another reason of you taking this your buy trade. You might put a line, let's say a horizontal line that will extend to your left hand side. Then you might go to maybe to like H4 daily time frame weekly time to see where this level is coming from. Most time you're surprised that it's coming from a resistance level which the market is reacting to on higher time frame. The market is reacting to higher time frame resistance level. Then since you are seeing that market is reacting to daily resistance level, you're not got another bias on higher time frame. Because remember that on inside daily candlestick, we have H1, we have H4, we have M30 inside that one daily candlestick. So before one daily candlestick will close, you are closing multiple M30. So now you're now backing your M30 with a bigger time frame to not entering that your set trade. But if that M or that W just created from a random place, there's no reason just for me. It can create and it can still take you out. You know, but once you are now using higher time frame to back up your entry, at least you are not just trading, you are trading with a reason. You are not just seeing a W, you just jump, or seeing an M, you just jump. You are trading with a reason, which is you are learning than just jumping into once you just see W, you just M, but you are trading with a reason so that in that way you are learning, you are building yourself. I don't know if I'm clear. So that just you relating with higher time frame. So I've talked about market structure. The last one here is head and shoulder. Now, head and shoulder is being formed. Now, remember, I've talked about support and resistance. I've talked about support broken turn, resistance broken turn, support. Now, our head and shoulder is being formed. Let's say we have something like this. I think this place is acting as our what? This place, resistance will be. Now, if I can give us a breakout, what are we now anticipating if market is pulling back? Market are giving us a breakout from this resistance level. So our market is now pulling back again to this same level. What are we kind of anticipating on back of our mind? supporter B. So we're now expecting here to act as a support. But once market now broke this support like this, now by looking at this chart, we understand that by looking at this chart like this now, so we understand that market has formed a head and a shoulder. This is our shoulder, this is our head. So once market is now pulling back, we are now anticipating head and shoulder on our mind now. Because we have seen a shoulder this side, we have seen a head. So this place that fail to hold up, the possibility that market can come here and this place will now hold, will now sell. That's how we will now come with head and shoulder pattern. Eh? So at first, okay. So at first I say here is acting as what? Resistance abi. Then when we have a break, it's not acting as a what? Support, which we are not expecting market to come back to buy normally before, but this place now feed. So when it feed, we see candlestick closing up below it, which we should understand the market is still a break or structure like break, like which the year two was still actually a break. Then once the market coming down, when you taking this guy for example, the market started going up. Based on what we are seeing, when I see market is trying to create a head and shoulder pattern, which we are not having our first shoulder here, but I've gotten a head. Definitely, when we see market reacting to here and fail to close above it, definitely we have not got another shoulder, our first shoulder, our second shoulder, and our head, which we are now taking our safety for market towards to come down. So that just the how this head and shoulder is being formed. And even if you understand, you see that everything is kind of relatable to just a particular one thing, support and resistance. So these are the kind of the foundation, or they are still kind of revolving in one particular circle. So you get. So let's see if we can do anything. Now, by looking at this chart, let me just zoom this daily chart like this. If I'm looking from this daily chart, if I'm looking from just this range, from just this high to this low, what can we see? Huh? You see? I say from this high to this low, what can we see? Huh?
The base structure.
I hear that shit.
What do you call head and shoulder? Yeah, let's start from in terms of structure. What can we see first? Eh? Downtrend. Up. Yeah, let's see now. Let's go to line chart. Let's use the line chart. So with line chart, what can we see? Downtrend. From where and where? So from where we can see that the market is actually from here. If we are doing from here, See that it's coming down.
Yes.
Abi?
Yes.
So wow, we see that this place was actually a break from here. So you can see that okay, from here, from there, you can see the market is actually coming down. Please let's start with that one first. Then if we go to our candlestick body, what can we see again? We have seen the market is coming down, which is structure. Which other thing can we see again? Let me zoom into it. So without wasting you guys' time, based on time, we understand that we are seeing that market is actually reacting to this resistance level. Are we?
Yes.
We see a market get to the react and drop react on this daily candlestick. And meanwhile, we also see that the market is falling from just this whole place, from just this movement, this small move. That the market is coming down. I don't want to use the whole chart. Let me just use here. So the market is actually coming down, like down. Then we now see the market has actually pull back, which get to this resistance level, and we see market actually reacting. Now on our daily time frame now, we have having the mindset of sell. Abi?
Yes.
So let's go to smaller time for like 4 hours and 1 hour. Let's see if we can see anything again. Now what can we see on 4 hours? What can we see on 4 hours? Or let me go to line chart. Because I'm currently seeing something on 4 hours. I'm seeing something on 4 hours. Eh?
That is rejecting that.
Which resistance level? Point out now.
Line.
Point out. What's with it?
Yes. The buying is rejecting.
Which price?
I said the market is going.
Which price? Which market?
It's coming down.
But there's something obvious there. Something so obvious there that like so obvious. That is M pattern now. And on that M pattern, we can also see that the market is even reacting to that M pattern. I don't know. Yeah, let's see. Yeah, it's reacting to the wall, to the neckline break. Yeah, like what I just explained. Market are giving us a breakout from that M, and market has now pulled back again to that neckline break, and reacting for them on 4 hours.
So where's the end?
Look at the M now, right? Here's the M now. Clearly, now it's clearly there's an M. It's clear, like bold, so bold enough. And M is here, Abi.
Yes.
Now, and again, on our daily time frame, we have seen that market is getting to a resistance level, and also a resistance level, and we have a bearish structure. And also looking at here again, we can also see that market has also given us what a break of structure again. If we should use this movement, like if we use from here to here and to here, you see that market are giving us what a break again to the downside on. Market are giving us a break again to the downside. And as market giving us a break, the market also form a M before a break. Now we are now seeing that 4 hours is now relating to higher time frame.
Yes.
In terms of sell, because daily time frame it wants a sell already. 4 hours now we are now seeing a sell, and now according to that is now reacting to that M. So remember I say some people also trade when market immediately market just stop and reject. They will just take the which is from this next candlestick now that is currently forming. People have already taken the set trade here at this stop. Because this is already a break and a retest. This now a candlestick confirmation of market actually tap and reject. Here might be the entry of a sale with like explanation that I've been given. But for me, I cannot take trade on 4 hours time frame. It's too big. It's too big because the stop loss will be too not about a scalper. BTC on a 4 hours time frame. You know how many pips? How much you want to risk before market will fall down? Like then you're only trading for like how many days? Like me, so I'm a day trader, not a scalper. So only thing for so the best thing what I'll do is that I might still go to H1 and M30 to look for a good place to enter my market, which I will have to still going to refine. Refine on this place that the market is currently reaching at. Yeah, like this. I will refine here to look for an entry to enter my trade. But for you guys that are new, like I said, market has already given a pullback. So if you are entering here, for example, let's say we enter our set trade here. Let's say we enter our set trade here, then our stop loss is at this level here. Then probably we might be targeting market to come down to this level. And if you see this is just 1:2. I don't know if it's but let me zoom it well. This is just okay, it's not too clear, but this is just about 1:2, which for me, I cannot enter trade of 1:2. It's too small for me. That's why I will now have to refine to see like refine the trade to maybe to H1 M30 to look for a good spot to enter that set trade than just covering this whole place. But it's step by step. So by we seeing you can say okay, BTC is coming down. From what we are seeing, what I have explained, BTC what is dropping like a short. Then remember actually that on every impulsive move, there's what we call a correctional move. Like another thing that we still need to see again, we see that there's an impulsive move down. Abi, market just down. But when the market is going on, you're going in a correctional freeze, then it only impulse to trigger here, but it fail to close above. So we do understand that the market might likely sell from this level. So that's just it. Any question? This is the H4 time frame.
Let me just understand the question. Are you saying M is for sale and W is for that?
There's pattern. When you see M for me, it's for sale, for buy. Based on patterns.
And you keep saying stop loss. How do we know if once to basis?
I just explain. I say for you guys that are new, you can just cover that high or cover that low. Which is you can just cover this high. Because here you cannot cover this high. Or you cover if you are taking a buy, you cover this low. Example. But now we are taking a sell, for example, now, so we are covering this high as our stop loss. Yeah, this place now, this week, yeah, this high as our stop loss.
How do you know the rate of stretch? For example, maybe you are taking a trade on this. Then the market just changed suddenly.
Yeah.
So how do you know that the market wants to change?
So how do you know the market want to sell in the first place?
Just like you explained, when you check your 1 day, 4 hours, you see that the market is going to buy or sell.
And you see, I'm asking, how do you know that the market want to sell at first?
Already just like you explained now, check my 1 day, check my 4 hours. I see that there's a particular price level. There is resistance. Tested it now and break it down. So I said, okay, this market wants to sell. But before you know, everyone needs to just for the market just to and pick up.
So you now find out same thing again to enter a buy trade. What you see that make you want to sell, you see that same thing again that will now make you want to buy. How do you understand me?
Yes.
That same thing you saw,
Yes.
that thing you saw that makes you like that man. See that same thing like that same thing.
You see a particular trade, maybe you check the 1 hour is bearish, 4 hours is bearish. Then you check the 1 day. Then before you know, the 1 day just stop bullish. Then the 4 hours are 40. So I think the market.
The thing is that you understand that, like I said before, inside a daily candlestick, there's H1, there's H4, there's M30, there's M1, which is daily time frame might be bullish, is going up, but once you get to a particular daily level whereby the daily want to start correcting, you will now see smaller time frame bearish. But once you are trading a smaller time frame, you already understand that daily is bullish. So once you are taking a smaller time frame bearish trade, you are taking that trade to where you feel like daily might start to buy. That will not be your take profit. Because daily is more higher than a smaller time frame. Because before daily time frame will move, there's a lot of volume that will push it. But smaller time frame, small money can just drop it. So once you are taking a trade, a sale on a smaller time frame, you are taking to where you know that daily. That's what you have, what we call a top-down analysis from your higher frame to your higher frame to your lower time frame. So once you know that this daily is going to say, you just ask, okay, if for example I want to take trade from a daily time frame, where should I take my trade from? So if you are taking trade for a smaller time frame, you're taking it to that particular place that you know that you take your daily trade from, which now be your take profit. So daily can be bearish, smaller can be bullish. That doesn't mean that you now wait for one time for all time frame to be the same time before you start. No. But immediately you see what you are trading on this one, you can take it, but you already have in the back of your mind that this thing, when it gets to here, it might change. So that's just it. So there's a reason behind anything that you are doing. Any time frame now. But the only time you can say which time way to avoid. You can avoid 5 minutes, 15 minutes. Because they are smaller time frame, they can easily hit your stop loss ahead. So, but just to, like I said, trading is all about emotion and psychology. Because if your psychology emotion is not too strong like that, and you just enter trade within 5 minutes, market just take you out. It start affecting you. You get so. Because you can be using like M30 H1 as your entry, as those ones that are bigger time frame. For market will take your stop loss. Definitely, at least there's a reason for market will just but M1, M5, market can just manipulate to just take you out, but still continue to your direction. But before market will take bigger time frame, definitely you are wrong on your direction.
You can use 4 hours.
You can use 4 hours. You can use H1. You can enter for daily time frame safe. If you wish to. But for me, like I said before, my need time is 5 minutes, 15 minutes, 30 minutes. I don't do H4. They are too. I'm waiting for a meal, not for I can get like 10 stop loss, it will not affect me. I'll still do what I want to do. Money can hit me stop about the bar, it will not say affect me. Because I know that at the end I'll still end up being profitable. The most important thing is that you are making money. That is the most important thing. Another question.
Please, let's have those 2 questions because of time.
You see? Like I know. For beginners, you must put stop loss now. You cannot be there be watching market. So as you take, you must put your stop loss and your take profit. Basically, you might not put take profit, but when you feel that market want to react, want to reject, you can just close. But if you want to build yourself, put your stop loss, put your take profit. They're trying to master it. If you believe that the market is going to go to that level, leave it. If you believe that it's going to go to that level, it's going to move from point A to point B, you leave, you put your stop loss, take profit, you leave the market. If at the end market now reverse to take it out, then you are building yourself gradually. That's why I say before you can able to swing trade, there are people that will trade for 1 year, 2 months, 3 months. Because they don't build that belief, that confidence to hold that trade. So it's gradually.
But swing trading and day trading.
Like for we will not get those big money to be put like some people now, they will risk like $30,000. They just will take that trade. At least when it turn to like 60K or on the key, that one is a big profit. Then I say maybe, let's say for example, maybe I'm trading like 2K, 3K or $4K for example. Maybe I enter trade using $500. Then I'm using it on a bigger time frame for like H4. Let's say I'm not targeting 1:10. That 1:10, then maybe I will make make like 4K, like 5K by risking that $500. I will not take me the whole year. That will be good profit now. Whereby I know that I can make that same money in a week, in a day, by using my. So you understand. But once you are trading, like some company, they target just 1%, 2%, 3%. But for you people like that, we are retail. We cannot target 1%, 3% as profits. Just like you are using $1K to trade, you are not targeting 1%, 2%. That is about $10. But if I think like $1 million, $10 million, 1% na big money.
Yes.
So that you see it. So like we are trader. So basically most time we do on day trading. We just do day trade like maybe only from Monday to Friday or 2 days or that same day we close our trade. That's why like I said before, I cannot use 4 hours to enter my trade. It's so like before 4 hours we move to give me 1:10, we take time. Not that I cannot see entry on 4 hours, so I will say anything, but I will have to refine it to a smaller time frame so that at least I can get like 1:5, 1:10 within that same day. So that just it. And if you want to flip, you can only flip on smaller time frame, not on a bigger time frame. If you are flipping, which you flip like $100 to like 1K on a single trade, it can only happen on a smaller time frame, not on a bigger time frame. The master time is step by step. That means smaller time frame. It cannot be on a bigger time frame. It's not scalping, no. You can call it scalping, but it's not scalping. Scalping means that you just enter trade. Scalping is wherever you are risking $500. I'm not gonna just give like $50, $100, you just close. That one is scalping. But once you are risking $100 and you are not getting $1,000, you are flipping your account, you are not scalping. Because most time you're like maybe you see a trade that will give you 1:3. Then you want to risk $100 to make $300. But since you believe that this market is going to move, like you are sure, you are not leveraging on your account, like you are not leveraging, like as market is moving, you are adding. So that instead of you making $100, you're not making more than. But you're still following the same risk to reward 1:3. Not do happen. Maybe the answer not going to get as possible. That's why most times. That's why now you guys have like privilege. That's why we have profem. So the privilege. Like the trade diversity that you explain now, these are leverage. You can leverage on profit by using smaller money to buy a big account to get to leverage more. And one thing about okay.
I've seen someone
Yeah.
the trader that will go with USD and he used $20. He got 2 trades, he got $60,000.
And one thing you guys need to understand is that not everything you see online you believe.
It's true.
I'm coming. I'm a trader, so I'm telling you based on experience. Not everything you see online you believe. Because most times you see someone tell you that you flip $10 to $10,000. Then that time when I see the new into trading, Then I was doing option trading, IQ option. I'll just go YouTube. I'll see somebody fund like $10. He will trade. If I know, it's not on 1K, 2K, 3K, 4K, 10K. We will do. I'll use my money go buy. I'll go buy Bitcoin. I will fund. I will try or lose money. I'll go again see. I will not lose money. Now, so I don't lose money. So you get so not everything you see you believe. Sometimes this is so like I don't know the way I want to put out. Just like the way we have Yahoo boys coming Oyibo. That's how we also have voice that are also like kind of Yahoo that kind of and let me just do it that way. Because when you see someone doing $10 to make $10K, most time they what we call a marketing strategy. Like you that you are eager to make money, you see someone flipping $10, you want to pay to learn or buy what the person is doing. Like it will motivate you to do what the person is doing. I don't know, based on you don't have money to form bigger account. You are see someone marketing a smaller this thing to make you want to. I don't know if ask them.
Because at the same time, the person sets a stop loss at $4,000. So when it made the trade the first time, it put the stop loss, both straight. This stop loss which is losing $8,000. Then it came during afternoon section. And traded again. That was when it got that amount.
Come again, he take trade, he lose $8,000. They now fund $20 to make $8,000.
His balance.
Now left $20.
He staked with $20. Then based on was trading on gold, he left the market buying. The first trade he made was sell. He left the market buying to an extent, which based on him, he lost 30% take off. He left the market buying to an extent. Till he got to $3,000.
The thing is that not that it's not possible, but what I want to make you to understand is that like what you say just now, he first of all lost $8,000. And I can tell you that he make $8,000 to you now, does it make sense? Let me ask you now. First of all, you say that he lost $8,000, Abi, I stop loss now. I kinda left with $20 in our old trade to now make about 8,000. Abi how many the profit? To now after losing $8,000, you know, does it make sense to you? Let me ask you first. You call yourself a professional trader, you lost 8K. Then at 20K now you got to make a bigger amount. So to you now, does it make sense?
No, like
Now I'm based on what you said now. If I ever lost 8K now, he lose $8,000 as stop loss. Then he now stake $20. He not put take profit. He just leave the trade. He can't make how much? Not Abi.
He said another stop loss of $8,000.
I don't know. You understand? We are telling you what you say now. You say if you ever lost $8,000, so what is left on the account is now $20. Abi, is now what? You now funded 20. You now funded another $20. Abi what?
$20 is our account.
You now funded $20.
$8,000. Which of the stop loss? He funded $8,000 in pay. To pursue the higher take profit.
That means I record it did not reach $20. It's 8K now. What are you saying? Wait to see. You say first of all, I'm coming. It reached 8K. Abi, which loss? Abi, yes or no? Now 8K first of all, it a stop loss. You now funded how much again? You now run that 8K again. Then you now stake $20 to trade from 8K to trade. You now make how much? $60. So when he staked $20, so which loss side did he use? I mean, you feel like if you add $20 on your account, you will use that same loss. Have you tried it? of use that $20. So definitely he used the 8K and not $20 now. So what you say? Are you 20 binary option whereby you $16? It's not binary option now, it's MP5 now. Which lot size you use?
Maybe the 20 you're talking about. Maybe it's the 20 lot size.
Maybe it's only lot size. Maybe I don't want getting into it. Maybe yes, exactly. Maybe it's only lot size. Maybe 20, maybe because maybe exactly. Maybe that's why you're saying it reached $20. Maybe because to even follow you lose 8K, now $20 to make it. No, just kind of think now. I don't know. Time don't go far. So like what I'm trying to say is that like now currently there's a more like a big village, like we have problem now. Yeah, so the most important thing is to learn knowledge. Capital now is not a problem again than before. Then I say, I know what I'm doing. Is a capital is my problem. Now that one now is red sign, it's cancelled. The most right now is to learn. There is capital. Now you can use a smaller money to get a bigger account. Just like when these people there, Trade Mastery, they did a promo. That was last month now. When they do the discount promo of 10K or for $49 or so. Yes, and for $49. When I did the promo, I saw it as an opportunity. I think I bought like 8 accounts. I bought like eight accounts. The profile, yes, man. Trade Mastery profile like here. I bought like eight accounts. No, because no, the thing is that like when you see opportunity, you know that it's an opportunity. You understand? So I have bought the 8 account. Now inside that 8 account now, just two accounts that I think I've withdrawn about $1,600 for just 2 accounts. No, not 2 accounts. One account and me, one of the accounts. I passed about 4 of the challenge. And the reason why make like the rest of the account just about like based on what I'm not seeing the profit, just need to just discover it. But one of my withdrawal now is still pending up to now. But apart from that now, at least I've withdrawn my capital, I've made profit on top because why I see it as an opportunity to get. So just imagine you funding $49. You have made about 1,000 plus as profit and withdraw. You get. So I see it as an opportunity. I know that I will make more money from it. So I just buy the account based on I know myself. Just like which is it that this year was it early this year when also that should be a March. I also came out. I did a video. I found account of about 1K. Then I told my followers to take note of that my MP5 ID. Take note of the ID. Then I take the account. That's what I used to buy this iPad of 2.5 million. That will buy the iPad of 2.5. The profit. I found the account. I told it live for everybody to see, to keep on watching that this thing. The only way I was able to come live and see that people say I believe myself and I know what I can do. And the only way I can do that is based on what? Knowledge. I did it, I make a profit, I withdraw the profit life, and I went to go and buy this part. The full profit. That also told my student that we are going to trade life. But one thing I observe about new beginners is that you people are too rushed, like now to the Warri, to the ace to make. Just imagine telling people that they want to trade with. They should buy an account and wait till on Monday to start trading. Before that on Monday, some have already lost their account. Before that on Monday, they already lost their account. before that money, the money it never reached, but they already lost account based on that eager to want to make profit. And once you are that eager to make profit, you end up not making profit.
How was that music?
You will end up not making anything at all. Once you are eager to say you want to make profit like 4 hours, you will not. So one thing is step by step, is gradually. Step by step.
How would I do
Forex. I think, let me say, I actually start with option trade, like I said before, that should be 2019. But I actually start Forex trading where that should be when I start doing for like MT5 Forex trading, that should be like 2021, 2021, those years. But I first start,
That's 4 years ago.
it is. But I first start with binary option. Therefore, then we start, then learn, 4 read Forex market 2021. Those time before start like learning, just that's.
How long can it take somebody to become a professional?
It's depend on you. Some people within even 6 months say that will start making money. 3 months, say based on how they are fast in learning. Some 1 year, 2 years, they are still struggling. 3 years, they are still struggling based on your determination to want to know these things you get. So if I tell you that I would like $30,000 for just one trade, we be
I'm not glad.
just one trade, we don't like $30,000.
One trade.
So that just it. It's just the mindset, and that's why I told Long Life that the only thing that I will do is that, because I always love people to get value for what they are doing. That's why I say, okay, what I will do is that probably I will do a premium training for people there, or those people that like they are with him, so that at least once you are paying for something, you are actually getting value of what you are doing. Because most people that thing